Yep, all good. No worries. Thanks, David. Thank you, Christian. All right, now let's see how I go. Starting the slideshow. There we go. Welcome, everyone. I know we obviously booked this about 2 or 3 months in advance, and we really didn't take into account it was Melbourne Cup Day, which is my fault. So this will be available on demand as well. I know people are out and about. Certainly, probably won't be too many people from the Melbourne area watching, but yeah. So we're going to get into where are we here? Slide next. Here we go. A little bit about MPC. So myself and Kai Chen started MPC about 2 or 3 years ago with Jonathan Takadina as well. Essentially, we're all experienced markets guys. And we're just very much, I mean, myself and Kai particularly came from the trading side and proprietary trading side and worked together in the past. And I moved over to the advisory side after 25 years trading, and we essentially set out to build something that was in the best interest of the investors, not run by salespeople. We were pretty, eyebrows fairly raised fairly high, seeing what the sort of standard was out there, and so we basically founded MPC Markets. So investment solutions, help when you need it, and what you need to know when you need to know it, not just bombarded with silly research and things like that. And big on the education side. I used to have a proprietary trading house that had an academy system. We taught people from absolute scratch how to be day traders. So we've got a very good background on that. On that side, we obviously, for those of you who aren't clients, we offer US stock picks, global stock picks, ASX as well, all different categories, small caps to growth to income. We've got we're very well versed at structured investments with some income investments similar to hybrids around 12.5%, some enhanced growth stuff that runs off thematics. This was one of the thematics that we did. So this AI and robotics we're doing today, we did do a packaged investment around about 14 to 20 days ago. And this was, some of our top picks from that. So individually, there'll be some stock picks in here. There isn't much on the ASX front, unfortunately, but we go through the ETFs particularly. And so you can sort of make an informed decision of what you want to get exposure to. Essentially, we've got 4 main things we're going to cover today. So we're broad robotics and AI robotics and automation. That sensors, chips. I sort of packaged Tesla into this category because it doesn't fit necessarily one particular category. Cobots and humanoid robots is another one. Help on manufacturing production lines. There's robotic surgeons now in healthcare, digital twins. Again, Tesla's doing, the humanoid robots with Optimus, warehouse logistics, and, we've got personal transport, intelligent transport systems, autonomous freight, etc. So, and the warehouse logistics as well. They're sensors, readers, anything from picking robots, etc. as well. So, why we went into this particularly, and this is sort of a series of the third of a series of 3 high conviction trades we've put on for the next couple of years. All of them we have high conviction picks in our long-term buy and holds. We're on Mosaic, which is our new recommendation content platform. So the first one was hyperscaling AI, which is all about data center trends. And the picks there have gone extraordinarily well. Second one was defense, which involved, and geopolitics, which involved gold, silver, platinum, as well as defense stocks. And this is the third one. So, and this, look, the main reason behind this one being the one we've left to last is, despite the fact that these investment and this investment thematic probably has by far the biggest compounding annual growth rate over the next 10 years. The issue with it is that, being early by a year or being early by a couple of years could prove to be, very frustrating overall. So, and all of these total addressable market, which is the TAM there, they're all estimates essentially. So, you've got to take these things with a grain of salt. I tend to try to water them down a little bit, but essentially all the growth forecasts are around, that 15 to 25% annual growth rate for the next 5 to 10 years. So when we're doing these high conviction thematics, we really do like to focus on things that are essentially, we do need company specific stuff, obviously, but what really helps, even, if a company has a rocky road to success, is if they've got a tailwind thematic and the actual addressable market behind it is expanding at a rate like 20% compounded annual, they can possibly afford to make a few mistakes here and there. So, so what we're looking at here today, particularly, there's sort of 3 or 4, the top 3 particularly are ones we're going to focus on. The artificial intelligence robots market is a bit, that's fairly broad. And, that sort of more applies to the AI side and how it's helping it. But the big dog really here is the fully self-driving transport is one that it could be in the trillions by 2035. We're looking at a projected valuation, well, conservatively, probably 237 by 2027, and that CAGR annual growth rate is going to be massive. Even since we started researching this and starting to recommend even certain stocks within this thematic, this has already grown faster than we've thought. So the rollouts from the Tesla fully self-driving cars has expanded at a much faster rate than what was predicted, and even from 3 to 6 months ago. So so that's a really big one that could creep up very, very fast and change the way we all move around the world. So the second one's logistics and manufacturing automation. Now, I think this one will probably be one of the safer thematics to invest in, because essentially what it brings is efficiencies. So, if you think about a board of directors, when you're going to buy technology, if you can guarantee that your efficiency increases by 25 to 40%, then obviously it's a pretty easy decision as a board to make that spend. So, and we've got a labour squeeze going on a little bit in some of these areas as well, in the manufacturing and logistics part. America's trying to bring back, via Trump, manufacturing back home. They don't have the expertise, so robots and cobots will be pretty key with that. But I think that these ones here really are going to be, they're not going to grow as fast. However, that efficiency drive, the efficiencies gained will drive the spend, because it'll be in both the cost savings part and the revenue part. Collaborative robots or cobots, they do fall a little bit into the manufacturing and automation part, and humanoid robots. Now, collaborative robots, we've got one of the picks we're going to have a look at today is intuitive surgical. That's both, collaborative robots by its very name is that they're surgeons using robotics and being assisted by robots on production lines in particular. This has increased. For instance, BMW had one of their factories in Europe. They basically ended up producing about 30% more cars on the same production line, because in the old days, robots on the production line wouldn't have sensors and they wouldn't be able to feel or see and be very dangerous to human workers. But now, with all the sensor technology and the AI technology that goes with it, and their ability to take into account the safety of a human, you can work side by side. So there are still definitely certain tasks that humans are better for, and certain tasks that obviously robots, which are much better for as well. And but basically now they can work side by side instead of being a potential OH&S disaster. The humanoid robots is a very, very new area. Elon seems to think it's going to be one of those things that changes the world. Very early to call, and how that's going to be used. but I think it's worth being mindful of moving forward. And then this artificial intelligence robots market, that will grow, but it'll be more around the chips and training models, etc. So here's the fully self-driving. Now, and we've got a little bit of broad information here on the robots by robot type. So service robots and industrial robots. As you can see here, they're fairly exponential growth there, but this fully self-driving total addressable market growth. Now, we've got Waymo, which is a Google project operating in California and Austin and things like that. Excuse me. But really what we've got now is Elon's really stepped it up. And what the advantage he's got really is that the existing Teslas upload all of their driving data to the Grok AI every night. Apparently, it's like 10 to 20 gig of data. And essentially, he's got a massive head start in terms of, how good the model is for, driving through traffic. You could go on to, x.com or go and have a look at YouTube. There are a bunch of different videos on how it handles traffic or how it merges and things like that. But the stats are quite amazing. I mean, essentially, it has I think it's 1 in 600 of the accidents or something along those lines that a human being has. So they are safer, albeit that it is super freaky having a look at it. They're even talking with the cyber cabs that they won't even have a steering wheel or pedals or anything, which will be a very new experience. But where they've rolled them out, they've been adopted extraordinarily quickly. So apparently, consumers are getting used to it really, really fast. But look, as you see here, I mean, the TAM growth can be significant over the coming years, and they will sit somewhere between in the pricing range of, for instance, certainly below an Uber, and probably just above public transport. And obviously there'll be more. There can be more of them, but instead of your car being a depreciating asset, if they're allowed to be owned, I mean, imagine being able to drive your car and then set it a barrier to go and drive Uber for you and make you some money while you're at work or at a meeting or whatever. They're even talking about, instead of parking now, you would essentially drive up to where you want to be. You get out, the car goes and finds a park for you or loops around the block until you're back. So there are, super convenient things there that are going to be really attractive. Now, these numbers are saying, look, 30.8% CAGR. As I said, I've watered these things back a little bit, just on the basis that it's basically fairly speculative. So I've tried to go in the middle on the CAGR, but realistically, commercial vehicles, passenger vehicles, taxis, and things like that will be where the main rollout is. They're already in Europe. They're supervised in Australia, and they're in. I think there's very large zones in Austin, Texas, Florida, California. I think they're still under supervision in the US. In New York's, and yeah, and we were essentially looking at that it's really only started in the last sort of 3 to 6 months. So this I think what it's called is the level 4-5 with the autonomous driving. Once they get that clearance, that's where they start to really roll out. There's expected to be mass production of the Cybercab from Tesla, I believe, second quarter next year. Although the Cybertruck, Elon's got a habit of possibly predicting things happening a little bit earlier than you think. So we will see about that. But he's also got a new manufacturing technique as well that could see out of some of those gigafactories, a unit being produced potentially every 30 seconds to a minute. So particularly when we get to full production. There are a lot of, particularly in China, these intelligent transportation systems, these unmanned transportation systems, and we've got the metro. Obviously, trains is a little bit easier because it's not dealing with external traffic. But these intelligent transportation systems are being used in China already, and for public transport, because essentially the roads are so congested. So they're trying to get people out of cars and onto these things so they can be more regular, they're cheaper, etc., and far more convenient. They can have more of them, and as well, the autonomous truck market could be quite huge as well, because you've got long haul, you don't have to worry about drivers having to stop, having to rest, etc. I mean, these things will take care of everything, sort of from end to end points. So there hasn't really been an autonomous truck launch as yet. That market is very, very small. Tesla's looking at it into the coming year, but I dare say at this stage, getting the bigger market probably is the personal transport for autonomous vehicles, and as I say, they've been rapidly approved. Many of the states in the US, they've suggested nearly a month of supervised. So someone actually, a government official, sitting in there and supervising how the vehicle operates, and there's been quite a few occasions where they've just, after 2 weeks, they've gone bang, approved. So the technology does very much work. So the fully self-driving part, really, look, Google and Waymo, for this particular reason here, cumulative autonomous miles, we've got 3.6 million from Tesla, and they obviously have the advantage of that existing passenger fleet of Teslas all around the world being, taking in data all the time. So you can see that the autonomous driving miles, this is mid 2025. I think it's gapped even further now. Waymo doesn't even come close. And if you go and have a look at those online videos of self-driving cars, all the bad ones generally are not the Teslas. They're quite often the Waymos or the Zooks. So they're the ones that sort of end up grinding down the barrier on a highway and things like that. So really, that is Tesla's our very clear pick in this. What we also think as well is that the data alone, when, Tesla's obviously taking the risk, as they did with electric vehicles, and being the first or one of the first, but essentially that mass amount of data, they'll be able to on-sell to the likes of BMW or Mercedes or whatever, because if it ends up being the industry standard and gets approved a lot faster than the other systems like the ones below, then essentially that data becomes insanely valuable. And in terms of Taiwan Semiconductors, because we do like to at least have a pair in these things. Uber was another one we considered putting in there, but we just don't know whether Uber may end up partnering with Tesla, or they may end up partnering with Google. I think they've got existing relationships there, but there is a risk that this, if Elon decides to go on his own, or Google decide to go it on their own, which it looks like they may do, instead of using the Uber platform, it could be a massive risk to it. So we didn't want to put that in there. Taiwan Semiconductors, the foundry chip maker, it really does cover the broad gamut of everything, really, because everything from the NVIDIA chips to they make 90% of the world's high grade chips, and they're involved in the production of many other not just the high grade chips, but the smaller chips as well. So that was our favoured picks. There was the ongoing demand from just this sector alone, let alone AI and agentic AI, etc. TSMC really just does tick all the boxes in terms of, if there is an uplift in this thematic, they're going to benefit no matter what. Like I say, Tesla as well, you're bringing into the humanoid robot part as well with Optimus, which is supposedly launching next year as well. $680 million worth of parts have been ordered for that, and they believe that they'll be in production by the middle of next year. Again, grain of salt. Elon does quite often say things that he can't hold up his end of the deal, but yeah, overall, probably your broad pick overall is Tesla. Whatever you think about the man, I think you probably just need to put it aside. And who knows? Thomas Edison could have been, as much of a a pain in the butt as what Elon is, but he didn't have Twitter, unfortunately. Elon's pretty public about a lot of things, but if you take that personality side out of it, look, the company is heading. I mean, there is key man risk there, but look, I mean, as long as these two new product launches are rolled out, I would say the Optimus and the fully self-driving, Tesla won't be necessarily a car company anymore. It'll be an automated transport and a robotics business. And I think the passenger cars that are driven by humans will probably be a very small percentage of their gain. Their Grok AI is across all of their platforms. He's obviously got Starlink and things as well, linking them all up. We've been through that one, sorry. And so now we're just going to go into, no, I've put the wrong heading there, but the warehouse robotics market. So industry development here really is, and as funny as that looks, that cute little robot does actually exist, but the product types are, the automated guided vehicles within the warehouses. You've also got the robotic arms in the Amazon warehouses. Symbotics built platforms for Walmart across, in Arkansas. Foxconn production lines in Shenzhen are all very much automated. And the warehousing, AI warehousing, I think was about a $13.5 billion total addressable market. It should be 10 times that by 2035. And then, you've got subsectors below that. I mean, you've got RFID readers, you've got barcode scanners, you've got, picking robots. There is a whole bunch of different things across the board here that, that AI and these sensors and sensor technology and the feedback to the AI can dramatically improve efficiencies. So, and a couple of the picks we've got in this, in this section here is Teradyne, and we've also, Symbotic does a little bit of it as well, and we're, but yeah, and this is all more so the production line, so and the robotic process automation. So, there's self-learning between the robots as well, which is a massive advantage for these systems. Is if one robot makes a mistake, it's all linked. The other robots learn from that mistake, and then that mistake is generally not made again. So and then you've basically got a computer doesn't have a short memory. You're not having any labor issues, and where they obviously can work for longer hours, etc. as well. So we're very much looking at the things in those spaces that I've mentioned before, like the BMW with the with the robotic. They have robotic arms working alongside humans. Similar in the warehouses, particularly, is that you've still got human being involvement, but you can go and send a robot off to do a job and come back. Again, there's some really great videos you can see out there for the picking systems and the packing systems in those Amazon warehouses. They're quite amazing, whereby it almost looks like ants crawling across the floor as they all go and find the different things that they pick. They'll put them in the packages. They'll obviously then put on scanning codes, etc. That keeps all of your inventory under control. You're not shutting down for inventory checks and stock takes, etc. The efficiencies will be incrementally. They won't be massive, but it will be small increments, thousands and hundreds of thousands, if not millions of times, that will bring that efficiency overall, to these warehouses. So the benefits are we're talking 30% cost reductions, and that for the e-commerce business, which is wafer thin margins, is extraordinary. So if you can obviously you can increase your margins and then and increase your efficiency and your customer experience. Then, as I said before, the directors or sitting at a board meeting, the directors of these companies, it's a no-brainer essentially. So there'll be really easy decisions for boards or companies to make that spend, knowing that they're going to get in cost savings alone and efficiencies alone, they'll be getting that money back. They're not rolling the dice on revenue or a future technology. Our picks in this, Zebra is one of them, and Teradyne as well. So Zebra's really about machine vision and mobile robot solutions. That I'm pretty sure that was the smaller robot that they run around the warehouses for people. They drive 20% productivity gains. The machine vision as well. They scan. They do a lot of scanning. They know where things are, barcodes, etc. So you're not getting lost within warehouses. They've got to. They're not just those things, but I think that's what they'll be the two main things that drives growth in that company. Teradyne's another one. It does robotics, collaborative automation solutions, warehouse efficiency. It could almost fall into the cobots part of this, of the webinar as well. So it's not particularly, a lot of these companies do cross over because a lot of it's to do with the software. Other players in this space are Honeywell, Symbotic, which again, Symbotic is in the next part with the cobots and humanoid robots part. So Honeywell as well. They've been developing. They're quite an old company in terms of they're certainly not a startup, but they've been involved in this for a while. Boston Dynamics was one that we really liked, but it's unfortunately been taken private very recently. And we essentially we've just sort of gone down the list a little bit to find some more specific companies overall. So the service robotics market could be interesting as well. It's not a huge market. I mean, we're looking at 20-odd billion, maybe growing to 100 billion by 2032. Again, I'm wondering. I mean, they've been tested at the Tesla Cafe in California. I don't think they're quite there yet. I would say this is a bit of a long shot. But as people get more, I mean, there's quite a few petrol stations in the US that are fully automated now. There's not necessarily a robot there, but you're not having humans in there. But there'll be more and more service and automated services done progressively as time goes on, whether it's in the guise of a robot that looks like this or a robot that looks like this. It's very different. Will be a matter of opinion. I'm not so sure on this one. I think when it comes to service, that will be something where I think humans will still probably want a little bit of human interaction. So look, this is pretty interesting as well. So who's going to benefit from the component manufacturing? NVIDIA, obviously, Texas Instruments, Qualcomm, Tesla. You've got Rockwell Automation, ABB, there's motor and batteries, a few Japanese companies there. Sony, I think Samsung's making some chips for Tesla now as well. So AMD does a lot of the sensor chips and quite a few of the localized chips that'll actually be on the humanoid robots, etc. Running them at the time, obviously with your larger AI and training models being in the cloud, but your base chips and GPUs and CPUs and things like that will be, AMD will benefit quite well from. But yeah, there are quite a few options, and there are quite a few. Quite a few options with different tilts. So, I mean, there's a company which we like. It's a company which we like, Autodesk, which used to be a CAD and architectural system, which is now doing all sorts of digital twins and all various different design jobs, etc. Which really they were a traditional company that then adapted AI very, very cleverly. And I think you'll see, a few of these companies in here, which you'll recognise a few of the names that will probably do the same as time goes on. So you'll have, it'll be interesting to see. So here is a bit of a ominous robot lineup. So, I mean, there's your average human, 6 foot tall, 81 kilos. And, the Optimus there is 47 kilos and roughly 6 foot as well. The Gen 3 is the one that's apparently coming out fairly soon. Getting the dexterity in the hands and things has been a massive issue. This has been a project that's been, quite a few years in the making, but they're not the only ones out there doing it. I think what we'll find is a lot of these will do specific jobs over time, rather than, a one fits all. I think there's been quite a few. The Neo robot was more of a household robot, that might be able to, act as your robotic butler, which has been, the source of many amusing memes over the last few weeks as they launched it. But they're, as you can see here, these sorts of ones that are, move a lot slower, that are a lot more robust, might be, more so for picking, and you've got them all around the world. I mean, Phoenix in Canada, Neo in Denmark, you got Singaporeans there as well, and then Chinese with Unitree, but it's not, we're not just talking Tesla and Optimus here. We're talking, broadly across the, there are a lot of projects going on, in many of these companies. So, Symbotic is one of the, AI-powered autonomous mobile robots. Again, they collaborate seamlessly in warehouses. So again, it could be a part of that logistics part, but really is they are doing some work in the humanoid robot part, and particularly in the cobots. And then intuitive surgical, which is the robotic systems for, like a lot safer and faster, less invasive surgeries. So at the moment, intuitive surgical is only doing, certain surgeries. I think they did, I believe around 2 million surgeries were done last year. It's one of the, and they've been fairly flat for the last year in terms of share price. They had a recent rally, and, they do trade in a very expensive PE, obviously because of the total addressable market for robotic surgeries. If you think about it, if you're in hospitals, they're constantly concerned about being sued and things like that. From an insurance standpoint, having, robotic surgeons that can't really make mistakes. I think their insurance, or are less likely to make mistakes, their insurance will be lower. So it would assist the surgeons still, and probably, those surgeries that aren't particularly complicated, etc., would largely be passed on to the robotic systems, and then your more high value surgeries would be, and more complicated surgeries would still be handled by humans. So, but look, it had a little recent rally. The great thing and the bad thing about hospitals is it's very hard to get in, and obviously I can't imagine how much these things cost. They would be extraordinarily expensive. But once you're in, you tend to be dug in like a tick with hospitals. So it's always really difficult getting in, and they are. I think they've been rolled out in Australia for a few years now, but many hospitals are now looking at these things, and they, and their adoption is accelerating quite well. If they start to expand the amount of surgeries they can do, then obviously their total addressable market then grows yet again, and then their value definitely comes up. In terms of, hospitals will just almost have to have them, otherwise, they're not going to be getting the surgeries. So it also, like as I said, makes sense from an insurance standpoint. Makes sense from a staffing standpoint. There's generally a lot of doctor shortages around the world, and nurse shortages, etc. So it would be a real complementary thing. So, and that's one of our high conviction picks here at MPC, has been for a year, but really only took off in the last few months since the last earnings. So other players, Boston Dynamics, as I said, has been taken over by private equity. Unitree's Chinese, but I mean, you probably go back here. There's not too many publicly listed companies where you're not, significantly rolling the dice. I think Tesla is probably the best bet for now, and probably Symbotic. As you can see, the Intuitive Surgical was probably a little bit of a risk, but now it's quite established. But Symbotic covers a number of different subsectors within this AI robotics and automation thematic, and serves a lot of purposes. Tesla has the backing of having other things going on, like their AI, like their energy, like their their passenger vehicles and cybercab. So probably the safer bet. I don't think you necessarily want to be going down the road of specific use humanoid robots at this stage, because if the progress is slow, or someone gets an early lead like Elon, and then the data again becomes an incredibly important part of it. I mean, Intuitive Surgical now would have millions of hours of different surgeries, surgical data. The likes of Promedicus as well, I would imagine, with their imagery data in Australia, would be that data is going to become valuable. I think equity markets globally at the moment are very much undervaluing these early leaders and how valuable that data is going to be in being able to be on sold to new people coming into the market, particularly not so much competitors, but or competitors or close to competitors. So people who are not directly competing, but more so competing on the fringes for certain different things where that data will be useful. So in terms of your ASX options, we had a look at Robo ETF and Robots ETF, and the really big difference, I think, was management fees are largely the same. Assets under management pretty close to the same as well. It really was the diversification. So I think one of them had a lot more stocks in it than the other, and for the life of me I cannot find which one it was. But yeah, we've got. There are other ETFs where you can get exposure. So, for instance, if you wanted Nvidia, Symbotic, Teradyne, and Tesla, Robo ETF. Oh, that's the one that's got by far the larger amount. Strangely enough, neither of them have Tesla at the moment. I dare say that might be because they're not in that market as yet. But I dare say it will be, at some juncture will be rectified. But I think the Global X Robo Robotics and Automation is probably, I would say, probably the best broad exposure. This one's a little bit more specific and a little bit more tied to, I think, Nvidia's performance overall. But yeah, and then the semiconductor really doesn't have a hell of a lot. Neither does ACDC. So you are a little bit hamstrung for options. We do have fast bricks in Australia. That's kind of been happening for a long time now. I probably wouldn't necessarily recommend that one. But yeah, overall, at MPC here, we do global stocks. We're one of the very few Australian-based with a recommendation service that recommends global stocks and supports it, and we can execute for you as well. No one wants to sit up till 1:30 in the morning, but also, we keep our finger on the pulse, because instead of trying to, you use pick from a very limited range of options in the tech market, we've gone and found, and the defence sector as well, which we struggle to find options. We've gone and given the globalization of exchanges now, we just found it better to go elsewhere, to other exchanges. So we did launch Mosaic, MPC Mosaic, our own platform here. Also largely written in breakneck speed by the wonderful Kai Chen, who you saw at the start of the webinar. Essentially, a great example of the a reduction in time lag to get something off the ground with AI coding. So we built this thing from the ground up, and we really built, given that we're ex-traders or ex-investors and we've done that for a living, we've basically built something that really is, that brings everything into one place, and it's very convenient and usable from square one. It's not just libraries and libraries of 40-page documents that you'll never read. It very much is actionable advice. There's a lot of education in there. There's part of the subscriptions as well, portfolio management. You can chat directly with your broker, so you can get help when you need it. We've got recommendations, get push notifications to your Apple, your Android, to your desktop, etc. And we've got some risk, being from trading backgrounds, we've got that, a backbone of risk management tools that we can help you deploy. Coming in the new year, we'll have instant views on, company announcements for your portfolio. We'll have a do your own research section. But at the moment, we've got all the content, all the podcasts, news, stock picks, all in one place. And there'll be incremental improvements to the platform over the coming months and over the coming year. And essentially what we're offering anyone who's on the webinar today, you can get a 1-month free trial. You just got to email us, and we'll set you up there, and you'll get all of the recommendations from the global to the high conviction to the ASX and very specific ones. We've got our structured investments there, the thematic investments, webinars, education, you name it, it's all in one spot. Very easy to navigate, and you can sort of get what you need to know when you need to know it. So it's a really wonderful platform. We've worked very hard on it over the course of the last sort of 6 months, and very proud of how it's actually ended up. So thank you everyone for coming and sticking with us. If you'd like to know anything about, if you've got any questions, if you just obviously you can send them to invest@mpcmarkets.com.au. You can also send it to me directly, mark.gardner@mpcmarkets.com.au. I think the invite came out from me anyway. There's a phone number there, but you're probably better off just sending us an email, and we'll get back to you pretty quickly. If you'd like that 1-month free trial, by all means, let us know of Mosaic. And if you've got any interest in any of or anything like structured investments, which is a very good and capital efficient way of pulling together these investments, because of where we are in the market, etc. They're usually 2-year investments, capital light. We can certainly start to introduce you to a few of those, because they've been very successful in the last in the last year or 18 months. So, but thank you very much for joining us. This will be our our last webinar for the year. We'll restart probably with the 2026 outlook in I would say January or early February. We do have the previous webinars, hyperscaling AI and the geopolitical and defence one, which you can, if you're a first timer, you can go back and have a look at as well. You will get an ebook with all of the base research on this. But don't hesitate to reach out. That's what we're here for. That's our job, and we happen to enjoy it. We like markets, so don't hesitate to reach out. And thanks very much. Good luck in the Melbourne Cup today, if for those of you having a punt. And we'll hopefully we'll see you another webinar next year. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.